and get started. So once again, my name is Tim Turzin. I am the Senior Sales Executive here at LKCS, and we're going to be talking about being a loan growth superhero today. So the first slide I like to start with is for those of you who don't know who LKCS is. This slide shows you a little bit of what we can do for you. We are a full-service marketing company. We've been in business since 1961, and we deal primarily with financial institutions. We've dealt with financial institutions the entire time, our entire existence, so we're very well in tune with what you guys are looking for, what your needs are, what your customers are looking for, and stuff like that. So on the slide, you'll definitely see we have a lot of other products and services that we do offer. So if there's something up there that seems interesting to you, I'll have some contact information up at the end of the presentation. Feel free to shoot me an email or give me a call, and we can go over any of those other products and services at your convenience. So today we're going to be talking about securing loan business, okay? We've got a couple different ways we can help you with that loan business, but the few main things we're gonna kind of focus on is we want to be on top of the buyer's mind when they're in that decision-making process. Okay, so we want to make sure that we're always, kind of watching out and making sure that our information or our name is in front of those people when they're out there looking for those loans. We then have to be able to prove that we have a better rate, term, service, whatever it might be that makes us stand out over the competition. We need to kind of hit on that and put that information in front of the prospective buyer so they choose us. We can always prove that consolidating debt saves them money. So a ton of people, unfortunately, are not financially fit. Okay, they get things because they need them, and they don't really necessarily look at the best ways to do things or how to consolidate or what they can do. So we can help them with that, and we can prove that maybe consolidating some different high interest type stuff into maybe a HELOC or doing a credit card balance transfer or whatever it might be, to get them a better rate and save them a little bit of money, make them really happy. So those are some things that we want to kind of focus on to help. And then as a bonus, I'm also going to be going over a little bit of how we can stay in front of these people that are interested, so the warm leads until they're ready to buy. Because sometimes people are interested today, but it may take a month or 2 months or whatever it might be for them to actually buy. So we actually have a new product to help out with that. So I'll slightly cover that towards the end. So the two main areas we're going to focus on today are our credit prospecting and credit alerting services. All right, they are two separate services. And the credit prospecting service is what we call a proactive type campaign. We're going to market to prospects or existing account holders with specific demographic traits or credit-based traits that are out there for loans. So these people either already have a loan and we can refinance that for them and help them, or they meet all the qualification criteria for a specific loan that they don't already have that they might be interested in. On the credit alerting side, it's what we call a reactive campaign, where we're going to market to people that are actively seeking a loan elsewhere. So these people are in the market looking for a loan right now. Their credit was already checked, so we're going to get in front of them, at that right moment to kind of get that business, funneled our way. So before I get into all the nuts and bolts of the campaigns, we always go over a little bit about what the credit bureau data really is and some rules and regulations that we kind of have to deal with when using that information. So some of the unique things here with LKCS is we use all three credit bureaus. A lot of other companies that are doing similar things only use one bureau, maybe two, but it's pretty rare to get all three. And the reason we like to use all three is because not all of the bureaus have information on everybody, at one time. A lot of people only report to one bureau, maybe two. So by sourcing out to all three, we always get the latest and greatest data to help us, find those qualifications or pre-qualification criteria. We also get up to a 70% increase in the leads that we get back from pulling data from all three as opposed to just one. Big benefit there. If I'm giving you 70% more leads, we can close, hopefully, some more loans, make some more money for you. And the best part, no additional cost to obtain the data from multiple bureaus. So we have preferred pricing through them. Whether you use 1, 2, or 3 bureaus with us, you're going to get the same price point or a price break. So it's a benefit, and it certainly doesn't cost you any more to use all three. Where we're getting the data from. So obviously we're working with the credit bureaus, and that's mainly where the data is coming from, but we do supplement that data so we can find other different, little nuggets and pieces of information to really fine tune and target market. So, our thinking is the more relevant and the more targeted we can make each mailing, the better it's going to perform. Okay, so we're actually pulling in information, obviously from the credit bureaus. We're pulling in a bunch of demographic information on those people. We're getting property information, automotive information. We're doing calculations for home value, so we're actually calculating LTV for you. We're householding, so if we want to specifically target, individuals or target the household, we can kind of do a little bit of everything. And again, the more targeted we can get, the better response rates we're going to get. And this is just showing you why we like to use all three. So again, I kind of told you that we get up to 70% more leads by using all three, and this graphic just shows that and reiterates the fact from one bureau to two, you're already going to get a 40% bump or so, and then 1 to 3, that 70% bump. So again, we really like using all three bureaus to really help you guys out. So when using credit data, you get to specify your lending guidelines, okay? We only want to market to the prospects or account holders that meet your specific credit criteria. And this criteria can be based on all kinds of different things. All right, I've seen some other companies that do this, and they kind of give you, a dozen options maybe, and they kind of limit you a little bit. We try not to limit you at all. We have hundreds of selects that we can use, so we really want you to be comfortable in what we're looking for, all right? When we're doing this, we have to do what's called a firm offer of credit. All right, we're going to talk about more on that on the next slide, but we have to also be in compliant with the Fair Credit Reporting Act. And there's a bunch of rules and regulations, and the best part about working with us is we deal with all that stuff for you. You don't have to worry about it. You don't have to get a headache over it. We're going to help you all the way through to make sure everything's compliant and good to go. So what that firm offer of credit is that whenever we use information from the credit bureaus, the marketing material that we're using to put that pre-approval out there have to do a couple things. Number one, we have to indicate that that person has been pre-selected, pre-screened, pre-approved. Pre-qualified is also one you can use, but that has to be on there first and foremost. There's also going to be some terms and conditions or eligibility requirements. So we basically have to let them know based on X, Y, and Z, this is why you're pre-approved for whatever it is. However, we're going to include some information on why credit may not be extended after all. So just because you've pre-approved them, you've only done it based on X, Y, and Z, and it was on a pre-type screen type deal. So when they come in, you still have full control. You're going to run the full credit check. If anything differs on that credit check from what came back on that pre-screen, they don't have proof of employment to pay back the loan, whatever it might be, you get final say and can deny them. Okay, so even though they're pre-approved and we tell them why, they still have to come in, they still have to go through all the regular channels, and you still have, the stick at the end to do what you'd like, or go, with what you normally would do. We're also going to put a minimum dollar amount on the piece, letting them know that they've been approved for, X. So if it's an auto loan, maybe you've been approved for at least, a $5,000 auto loan or whatever that might be. And then all of the opt-out notice and disclosure information, letting them know how they can get out of receiving those pre-screen type mailings if they chose to do so. All right, it's pretty confusing, but again, we help you with all of it. But those are some things we like to go over so you're aware of what this stuff is. So first, I'm going to talk about our credit alerting service. Okay, and again, this is the reactive style campaign. We're going to react at the right time with the right offer. Okay, we're going to reach out to our account holders who could be defecting to our competition in near real time. We're looking at all of the actual credit bureau information when we're doing this, and then we're going to deliver a firm offer of credit and cross-sell additional products the moment we see a need has been identified. And the big word in there is cross-sell. So I love to tell everybody this because not a lot of people think about it. Obviously, they're in the market for product A right now, but once I do that pre-approval process, I know all their information. Okay, so yes, they're interested in product A, and we can talk to them about product A, but if I get them in front of me, I'm going to talk to them about product B, C, and D as well. If I can help them on one thing, chances are I can help them on several other things. So it's a good opportunity once they're in front of you and interested to go ahead and cross-sell all your other products and services. Really boost that ROI up. So how this system works is whenever an account holder applies, and they can apply for credit anywhere, an inquiry gets posted to their credit file. All of the inquiries are categorized, so we actually know what they were in the market for. So it's going to specify that they were looking for a mortgage loan, an auto loan, installment loan, credit card, whatever it might be. We would have a file of your account holder database on file, and now we're going to cross-reference against the credit bureau's live feed. Okay, so as the credit bureaus are doing these checks, we're actually looking and seeing if anybody matches that's on your account holder database. If they match, we look at it a little bit further, depending on what product they matched. Okay, if they were in the market for an auto loan, we then see if they meet your auto criteria. If they were in the market for a mortgage loan, we look at your mortgage criteria. Okay, if they meet all of your criteria, we then give them back to you as a lead. Okay, you are then able to respond with that firm offer of credit as soon as we get it. You are able to select what categories and what inquiries you want to target. So you don't have to do everything. All right, so if you only wanted to look for mortgage loans, or you only want to look for auto loans, or whatever it might be, you can mix and match however you feel. That's perfectly fine. And then obviously, again, all the leads are screened using your qualification criteria. And again, that criteria can be based on anything you can think of. All right, we can actually do subsets of criteria. So something like mortgage product A has these criteria, and mortgage product B has this other criteria. So we can see which product actually best fits them that way. Okay, we get daily alerts from all three of the bureaus, and we provide that list of leads, and we could fulfill any direct mail or email offers the same day. Okay, so every morning, usually it's right around 6:30 or so in the morning, my phone's going off with the bureau feeds of all the information of everybody that was kind of hitting on our clients there. And then again, with our direct mail and email services, we actually send that stuff out same day. So as soon as we see the lead, we can get that stuff out for you. You don't have to use LKCS for it, but one of the benefits of us is we do have all of our own production equipment, offset presses, digital presses, mailing equipment, so we can kind of control that and get it out same day. Other companies, may take a couple days because they have to outsource stuff like that. So it's a pretty straightforward product. So this is just a quick recap or overview. But we're going to provide credit-based activity alerts from all the major bureaus in this case. We're going to be able to give you the ability to close loans that would have went to your competitors by comparing the activity every single day. You get to monitor and identify the people that are out there looking for mortgages and auto loans and consumer loans and all that good stuff. You get to set the criteria to identify the people that are going to qualify for those loans. And again, that criteria can be based on anything you want, and the criteria can be different for each individual product and service. We're then going to send out a direct mail piece, an email piece, or we can provide an outbound call list to you or your call center to contact. So you have multiple ways you can get in front of them, whether by direct mail, email, or phone call. LKCS can help you with the direct mail and email portions of things. Obviously, the phone calls we would have you or your staff do. But any way or any combination of the three is more than okay. So before I jump to the next slide, I actually have one quick question that I want to kind of put up to poll the audience here. And the question is, what do you expect to get back from a campaign? So if you're going to spend some money on a campaign, what is your expectation to kind of get back from that campaign? I'm going to launch it here. So are you looking to get 2 times the cost of the campaign back, 5 times, 7, or 10 times? So it's on the screen. Go ahead and vote, and I'll give it a second. All right, I'm going to close it here, and I'm actually going to share the results with everybody. So if you guys can see, the majority, about 50% here, you guys want about 5 times the cost back. Okay, and that's about average, kind of what I expect. 33% of you are really go-getters there at the 10 times the cost, and that's okay too. And a few of you, at 2 times the cost. So you're looking to make a little bit. All right. So we can see 5 times the cost is definitely the average, or what the majority here voted. So when I go to the next slide, this is an actual case study for our alerting service. This is looking at number of customers monitored at 20,000, contact rate of 35%, and a fulfillment cost of $2. Okay. So you can see what the trigger rate was for 3 different products or services, the amount of leads you're going to get, the amount of contacts based on that 35% contact rate, the contact to close rate, because you're not going to close everybody that walks through the door. Okay. So the number of new loans you're going to get in a month, the revenue per month, the average costs, and the breakdown. All right. So in this example here, we're getting almost $11 back for every dollar we spend. So those of you who want 10 times the amount back, this is proven and can do it. So there's a calculator out on LKCS's website. If you go to lk-cs.com, under the marketing tab, go to the credit alerting page, and there's a calculator. You can go ahead and plug in your numbers and kind of play with this a little bit if some things are a little bit different, and it'll go ahead and let you know what to expect as a revenue for this type of campaign. All right, but definitely tried and true and proven to get your money back and then some on this. So that's why I asked the question. So switching gears, we're going to go to the credit prospecting side of things. Okay, so a little bit different product and service. And again, this is a proactive type thing. We're out there kind of looking for different loans to go get, and everything's available in our system. All right, we can look for auto loans and mortgages and HELOCs and any type of refinance you can think of, or credit cards, or so you can dream it up. We can come up with a campaign for it. So in this instance, we're going to pre-screen your existing account holders or reach out to credit qualified prospects who live in your area or areas that you kind of serve. Okay, so they can be account holders or non-account holders, doesn't matter. We're going to extend pre-approved offers of credit to these account holders and non-account holders based on their actual credit information. Once again, you're setting the criteria to identify the people that you want to target. We can then send out direct mail offers, email offers. You can make an outbound phone call, however you want to do it to get in front of them. And then we also do have another service called DataFlex that helps you measure the results of the campaigns. Not only these campaigns, but any marketing campaign that you'd be doing. All right. So just a quick tidbit on that. It's an advanced financial marketing reporting and tracking system. The system is very, very robust. If you haven't seen it, I definitely recommend you taking a look at it. But we can measure the results of all the pre-screen mailings that we're doing, credit alerting efforts, any other marketing campaign that you're kind of thinking of, and it can incorporate into all kinds of things and track individual results and identify different cross-sell opportunities and look at how your customers or members are using the institution. And you can kind of go crazy, and it ties into any or works with any core processing system that ties into it, but it works with any core system. We can get the data out of the core to make this system work. So it's definitely a neat little tool. This is just a screenshot of a couple different things that you might be expected to see in it. So a couple potential credit prospecting campaigns, and I found this is the best way to kind of talk about it, is to show you a couple examples of what a campaign could look like. All right, so remember, these are examples. Us here have come up with a dummy criteria. We can definitely adjust it as needed to make it fit for you, or look at something else that you want. That's perfectly fine, but this will give you an idea of the power of this type of tool here. So in this instance, we're going to look at a couple different auto refinance campaigns. First up is our lease expiration campaign. All right, I'm going to look for people with FICO scores of, say, 620 and above. They do not have late payments or repossessions on their record, and they have 1 to 3 months left on their current leased vehicle. So I will take a bet that anybody that has a leased vehicle, 99.9% of them are going to be in the market for another vehicle. Very, very few are going to turn that car in and start walking or taking the bus or whatever it might be. So this is a great time to get in front of those people, all right, because they're in the market. So we can look for those people, get something out to them, letting them know what our current rates are, what we have to offer, why it's better to buy than lease, whatever it might be, to get them to come in and talk to us, and we can help them with that next loan. straight loan payoff. All right, so a straight refinance. We're going to look for people, let's say with FICO scores of 640 and above. We're going to exclude late payments or repossessions. I'm going to look for people that have a loan balance of greater than $5,000. So at least there's a little bit of meat left on the bone for doing that refinance. I'm going to make some money on it. And a minimum payment savings amount. So what that means is we can actually calculate how much money you can save them over what they're currently paying. Okay, so if you say, I only want to target people that I can save, $25 a month, that comes out to about $300 a year. So if I can save them $25 a month or that $300 a year, I want to target them. If I can't save them at least that, I'm just going to kind of ignore them. We can actually do that calculation, so you're only paying for the ones that we know we can help. A couple other different campaigns. Here's a credit card balance transfer type campaign. We're going to look for people with FICO scores of 620 and up. I'm going to look for people with revolving balances above $10,000 potentially. I'm going to look for the people that are using only 30 to 70% of their credit limit. Okay, maybe the ones under 30%, they're the ones that are using it and pay it off right away. The ones over 70%, sometimes getting a little bit of trouble. But the 30 to 70% range, they're using it all the time. They're paying all the interest. We like them. All right, and then they don't have any current late payments. So if I can look at that, I can let them know that, hey, my card at this rate with these perks or benefits or whatever it might be, roll it all over and we can save you some money there. And then I'm going to look at a conventional mortgage style refinance. So looking for people with FICO scores of, say, 680 and above, mortgage balances of, say, over $100,000. That mortgage is not currently an FHA, VA, or reverse mortgage. I'm going to say the age of that loan is 1 to 6 years old or so. So they haven't done anything with it, refinance it, or whatever it might be. In the last 1 to 6 years, chances are rates are still pretty darn good right now that I can save them some money there. And say up to 95% LTV or whatever it is, you're comfortable with. And we can reach out to those people and go ahead and let them know of what we can do to help them. On the mortgage side, we can also do the payment savings. So if you wanted to save somebody a specific amount of money, we can look at that. Just can't do it on the credit cards with the variable rates and everything. You can never quite nail down the payment there. All right, so I'm going to show you a couple sample campaigns or ways you can kind of get in front of these people. A couple different things we can do here. So this is an example of a postcard, direct mail style piece that we could send out. Everything that LKCS would do would be full color, variable data print, etc. For those of you that don't know what variable data print is or VDP, it means that everything on the piece is variable or can change based on things we know. So especially when dealing with credit, not everybody's going to get the same offer or same rate or be qualified for the same amount. So all that stuff actually changes from piece to piece to piece. So, a few years back, you may have done, a loan promotion mailing and you send out, a couple thousand postcards or whatever it might be, and they're all the same. Well, that's not very relevant. Okay. Now we're going to send out the same, 3,000-4,000 postcards, and each one's going to be different. Each one's going to actually put in that person's information, what they're qualified for, at what rate, potentially the closest branch to them, a specific loan officer that they're tied to, whatever it might be. We can specify all those little things to make it as relevant as possible. Okay, so again, this is just an example of one type of piece that might be there. This slide here on the left, it's showing you a personalized letter. So a letter would go in like a number 10 window envelope. Again, with LKCS, we're using actual single window envelopes. A lot of people use the generic double window style. And I guarantee that you yourselves aren't using generic double window style envelopes to send out anything from your branches. So we always mimic exactly what you would send. So your branding, your colors, everything goes on that envelope. It has a higher open rate. Okay. On the right, I have an example of a statement cover letter. Now, a couple times in the presentation, it said statement answer or something about statements, and I left it in there just to kind of tease you a little bit. But LKCS, we do statements and e-statements here, and one of the ways we have worked with these campaigns to help our customers save money is actually tie it directly into that statement or e-statement. So the first page of the statement or e-statement would actually be that pre-approved campaign offer or the skip a pay promotion or whatever it might be. All right. But you're tying it into that so you don't have to send out a separate mailing. All right, the biggest cost of any campaign you're going to do is going to be postage. With your statements, you're already spending the money on postage, so we can piggyback on that. You're already paying for the processing for the e-statements. We can piggyback on that, and it's kind of free money there. So it's a really, really good solution. I'm not sure, if you don't use LKCS, if you have the abilities, if you don't, but the technology is definitely out there, and it's something to think about and look at. And then in email marketing, obviously more and more people, you have the email addresses of their account holders, and this is a great way to get in front of them. All right, we have people that do the direct mail style. We have people that do the email stuff. We have people that do phone calls. We have some people that, mix and match everything, and everything seems to work. All right. I always say the more touches you get, the higher ROI you're going to get. So I always feel that I love supplementing everything with the email instead of it being a standalone. And I'm a little bit biased because it seems like I get thousands of emails a day. So I delete a lot. So I might miss some of this stuff. So I always actually prefer direct mail, in my line. But everybody's a little bit different. All right. So before I jump to the next slide, I'm going to ask another question and poll you again here. So I'm actually going to ask, if you're actually interested in a product or service, what is the first thing that you're most likely going to do? Okay. If you're interested in a product or service, what's the first thing you're going to do? The poll is up, so go ahead and vote, and I'll give it a second here. All right, I'm going to close the poll here and share the results with you. And surprise, surprise, 100% of everybody in the webinar today decided that they're going to go online and visit the website to learn more first. Okay? Not shocking. Not shocking. So that bonus I was talking about at the beginning of the webinar, this is we're gonna kind of go into the bonus. So now knowing that everybody thinks like me and is going to go online, we're going to talk about what else we can do for you here. All right. Biggest problem is in marketing now is we're sending out our direct mail pieces or doing our email marketing or our radio ads or whatever it might be, but it all has the same intention of driving the person online. Okay. Once that person gets online, what happens? If they don't apply or do something, they're lost, right? So LKCS has actually come up with a new solution, a new product to help convert these type of people. So this slide here is showing some information about how we're going to link that offline world to the online world, and direct mail specifically here. So 92% of people are influenced by direct mail to make purchasing decisions. 40% of consumers actually made a purchase in the last 3 months based on direct mail, and 39% say they're going to try a business for the first time because of direct mail. Now, when I say direct mail, I don't say junk mail. Okay? If you're getting that credit card offer every single day that it seems I get, that gets tossed immediately. I don't look at it. If it's addressed to current resident or something generic, I don't look at it. If it is relevant to me, makes sense to me, has my name on it, and actually, looks like it actually, is with my lifestyle and how I'm spending and all that type of stuff, I get, it gets my attention. I look at it for that 15, 20, 30 seconds, whatever it might be, and I get interested. Okay. So we don't want to send out junk mail. We actually want to send out good direct mail pieces that are relevant to the people because it makes a big difference. But we know, and 100% of you guys say, we're going to go online. We're actually showing 90% of people actually go online first. So there's still 10% of people out there that would rather call or come to the branch. But most people are going to go online. And most likely after they check out, your website, they're going to go to a competitor. Okay? They're going to check you out, and then they're going to check the competitor out to make sure that that product or service or whatever it is we're offering is actually as good as we say it is. But the next stat is really unique, or interesting is that 96% of unique website visitors are going to leave your site without taking any action. Okay. So in other words, if I did some type of campaign and we had 100 people that were interested in that product or service go to our website, only 4 of them are going to apply for that product or service. 96 people were interested and then left. And then what happened? It's a huge number of people that are leaving that we want to make sure we get back. So before I tell you the little secrets of the campaign, I'm going to show you this because some people have a hard time convincing, the board, the CEO, whatever it is, to spend the money on mail. So response rates, you're going to see on the response rates of direct mail are in the full percents. All right. On the right in the digital channels, they're in tenth of percents or even hundredths of percents in one case. Okay, so your direct mail is going to outperform your digital channels by a long shot. So the next argument I hear is, that's great, but direct mail still costs a lot more. So I like to break down the numbers a little bit different for you. And I'm actually going to show you cost per acquisition. So if you look at the cost per acquisition on both sides, direct mail is right there. Okay, it does not cost you that much more, if at all. Some of the digital channels are way more expensive than direct mail. So direct mail is definitely viable. We love it. If you haven't done something like this stuff's really helping get a lot of ROI. So definitely think about it. So how this works, we call it our campaign suite. First thing we're going to do is attach an IMB tracking code to any mail piece we send out. It's a cutting edge barcode technology and it tracks your mail piece. So we actually can tell you exactly when your mail pieces are going to be delivered. And then in real time, we'll update you as they're being delivered. Okay. Once that gets delivered, we know those people are going to go online. So when that direct mail recipient visits the website, we put a little cookie on their computer. All right. And then we use Google and Facebook, their networks, their ad networks, to look for those cookies. And then image ads matching your campaign's design and offer are going to follow them around. You get to stay in touch with those people until they take the desired action. So in my example of 100 people going to your website, 4 people applied, 96 left, they're going to get followed with these different ads and different things like that, and hopefully come back and take action. So again, we use the Google Display Network and the Facebook ad network, but the Google Display Network's the big boy. All right, everybody uses it. The example I like to talk about is Amazon. I would say about everybody on the call today has shopped on Amazon at one time or another. So if you think back on that time you went to Amazon and you left, when you left, you started seeing ads for whatever product that you were looking at on Amazon start popping up all over the place, right? That's the Google Display Network in action. We tapped into the same thing. So Google basically rents all these spots on all those websites, and then as they see that cookie, the relevance of it, it's going to show your ad. Okay, really, really cool. Also, you get a whole online dashboard. This is just one piece of it that I took a screenshot of, but this is just showing the online follow-up. How many people were kind of following and how many times those ads have been displayed. Awesome little tool. So I could talk about this piece for an hour by itself. So I'm gonna kind of drop it at that, but it's a really neat little bonus I wanted to kind of throw out there and let you guys know that stuff's there. But the big benefit, we're going to get, higher returns on investments from stuff. Don't leave any leads behind. And it's a flawless sales system. So it's got a bunch of other pieces, included call tracking. So I forgot the slide was in there. So now I'm done talking about it. So now the cost for the actual loan side stuff. On the prospecting side, pricing does depend on several different things, and everybody's going to be a little bit unique, but it mainly comes down to the number of records that are purchased, any additional demographics that you might purchase, and then what the credit bureau minimum charges are. Okay, we run free list counts and estimates for anybody that asks. So anybody on the call, if there's something that you're interested in, feel free to reach out to myself. One of the other sales reps here, if you already do business with us, feel free to reach out to them. We can always jump in our system and run you a count and an estimate really, really easily. it only takes, a matter of minutes once we can actually sit down and run it. So it's not that hard. I definitely welcome you to reach out and have me run list counts and estimates for you in the near future. Because as I said, the pricing is a little bit different based on everybody, just because of the different demographics or different areas or what you're looking for. So everybody's a little bit unique. On the alerting side, it's based on the amount of account holders or prospects that we're screening each month. Okay. On this case, we run free opportunity analyses. So if you want to have an idea of what this costs and what you can get out of it, get a hold of me, get a hold of one of the guys here, and we'll run an opportunity analysis for you, where basically we take the account holders that you want to target. We will look backwards 30 days in the bureau system, and we will tell you exactly how many people in the last 30 days were out there looking for loans that you could have potentially, got in front of and got them to take that loan with you. And we'll give that back to you. We'll also be able to tell you how many people would have been approved by you if you give us a little bit of information, all that stuff. So the opportunity analysis really helps us determine the feasibility of that program for you. So again, reach out to me. I can't actually give you the numbers over the phone because everybody's a little bit unique. So I don't want to quote anybody or say one base number and have somebody else think it might apply to them, because it won't. So go ahead and get in touch with us here after the webinar. I'll go over all the pricing with you, get you any counts or opportunity analysis you want ran, all done for you. So that is actually everything I have for you guys today. I definitely appreciate you guys taking the time to sit in our webinar.